Tony Greco, Senior Tax Advisor, Institute of Public Accountants. Purpose of this short presentation is just to reinforce what must be done for the year ending 30th of June 2012, primarily in relation to trusts. You should be aware that things have to be done slightly differently this year. Most of you should be aware that the rules in relation to trusts have changed. They're still changing, I should say, court cases, and we've got an interim, some interim provisions, and we've also got a review of trusts. But this year, 30th of June ends on a Saturday. Walking the dog, going for a run, cycle, you'll have to add one additional activity come this financial year end, and that has to deal with trustees having to put a resolution in place before that finalisation of this year end. So an income distribution and resolution has to be dated and signed prior to the 30th of June. That's what the ATO and everyone has been telling trustees they must do. Now, everyone must check their deeds. There will be some deeds that actually specifies an earlier date than the 30th of June. So if you date it the 30th and your deed says the 28th, you've passed that date, and that income resolution will not be effective for making beneficiaries entitled to that income. If you might have a deed that doesn't actually specify a date that the deed or the resolution must be done by, then what the courts have said is it must be the 30th of June. So no date in the deed, take that as being 30th of June. Now, why is this year any different to prior years? The reason being is there has been a lot of court case activities, and the ATO, as a result of the judgments in those court cases, have withdrawn a lot of their administrative rulings. In particular, IT 328 and IT 329, those administrative rulings essentially gave trustees up until the 31st of August, and that's 20 years in the making. So most of you will be aware that you've got up to the 31st of August to put those resolutions in place. Now, they have effectively been withdrawn, so that is why this year is a little bit unusual in the sense that it must be done prior to the end of the income year. Now, most of you will be saying, well, I haven't done my accounts. I don't know what the income figure is going to be. What you should do in those cases is use percentages or fractions, or specify a certain amount to certain beneficiaries and the balance going to other beneficiaries. So there are ways you can deal with the fact that you may not know what that income level is going to be at that point in time. Now, the other thing that's very important in relation to trusts is streaming, and that refers to allocating certain classes of income to certain beneficiaries. And last year we had the provisions, legislative provisions, which allowed streaming to continue because of the Bamford case, which effectively said that streaming wasn't effective under the current rules. So a quick patch was put in place that allowed streaming post-Bamford. Now, those streaming provisions only allow you to stream dividend income and capital gains. There's no other class of income under those interim provisions that can be streamed. But for you to take advantage of those streaming provisions, the deed must allow for streaming to take effect. So even though we've got a law that says you can do it, unless your deed says you can, then you can't take advantage of those provisions. So by default, you must have a look at your deed and see whether you can actually take advantage of those streaming provisions. Again, if you do want to take advantage of distributing franked dividend to certain beneficiaries and also capital gains, which can be highly tax effective, then in that resolution you must specify the proportion of that dividend income or capital gains that you want to go to certain beneficiaries. So that also must be done by the 30th of June or a date earlier as per the deed. Now, the provisions do allow for capital gains to be done up until the 31st of August. But here's the big but. If the trust income includes capital gains within its definition, then by default that resolution must be done prior to the end of the year or a date earlier as per the deed. If the income of the trust does not include capital gains, then technically speaking you can have up to the 31st of August to allocate that income. But it's most common in most deeds that the income of the trust does include capital gains. So therefore we're encouraging people to make or take advantage of those streaming provisions by the end of the financial year. So again, have a look at what your deed says, look at what is included in trust income, and then if it is in trust income, then 30th of June, disregard that later date, 31st of August. Now, the ATO have put everyone on notice that they're going to, or put trustees on notice that they're going to do a fair bit of compliance activity to make sure that trustees have in fact made those income determinations and resolutions by the 30th of June. They've nominated a number, I think 1,500 trustees who will get a letter saying, please provide a copy of that resolution. And they want to see it dated and signed because that effectively shows that that action has taken place prior to or in accordance with the trust deed. So I wouldn't want to be any one of those unlucky trustees who haven't actually done that and then they get the call up from the ATO. And what are the consequences for not having those resolutions? It comes down to this, quite simply, that unless there are default beneficiaries, then all that income will be assessed in the hands of the trustees. And why is that such a big deal? Because A, it will be taxed at the highest marginal tax rate, and also the CGT concessions that may be relevant aren't applicable for trustees. So there are some pretty dire consequences for not having that resolution dated, signed and evidence prior to whatever the deed said or the 30th of June, whichever occurs earlier. So again, we want to just make sure that this is the last week leading up to the end of the financial year. So just one other activity that you must do by 30th of June. Again, I want to reiterate why this particular year is different to prior years. Because the ATO has withdrawn those administrative rulings, their hands are tied. The courts have effectively said that those administrative rulings that everyone has got used to for an extended period of time are no longer effective. They're going to go out in the marketplace and make sure that trustees have actually complied with the law, and if they don't, they will suffer those consequences that I remarked on earlier.